Hi, this is Doc Jones, the resource investor. I'm here talking with Bob Weers, the CEO of Osisko Metals. It's a company I recently added to my portfolio after they announced a transformative deal with Glencore to take over the Gaspe Copper camp in Quebec, which has a number of historic deposits on them. Some of them are obscure, more obscure than others that people weren't aware of, much like Porphyry Mountain, which historically non-43-101 compliant at this point, has over 400 million tons at about 1% copper. And the thing they're going to be focusing on first is Copper Mountain, which will be an open pit. When they just came out with the resource on that, the initial resource prior to them doing any definition drilling, upgrading, defining of the byproduct credits of over 400 million tons there. So I've asked Bob to walk me through the presentation now that the resource is public, and to add a little color to this other project they have outside of Pine Point, which is a massive zinc lead project in Canada as well. That's has a new PEA coming out in May. So yeah, it's very exciting times. Hi, Bob. How are you?
Very good, Jim. Yourself?
Oh, I'm doing well. Thank you. Thank you. So you put out the resource. That was very exciting. You got 456 million tons that's open pittable, and that doesn't include the byproduct credits at a 0.31% copper, just the sulfides.
That's right.
So what are the important points about this that you think we should know?
Okay, let me go through it. We modeled it it's a whittled model, of course, at 380 copper, so it's fairly conservative. The resource was all classified as inferred, but that's only because it's historical data. Right. And with 43-101 regulations, even if the hole was drilled last month, when you're a new issuer, you basically have to consider that, although all that historical. But we're talking about a data set here of over 3,300 holes, 27,900 composites in the analyses. The database was split into 4-meter composites, so it's a hell of a lot of data.
Yeah. And
normally that should have led directly into measured and indicated. But again, because the only thing that could be validated were the 2011, 12, and 19 holes drilled by both Xstrata and Glencore, we can classify any of this as a measured and indicated. So it's an inferred for now. We're drilling 30,000 meters, largely for validation and infill, and that'll lead at the end of this year to an adjusted measured indicated resource. We obviously believe that virtually all of the inferred is going to go into the measured and indicated category. But it's also part of the drill program is also designed to better establish this ratio here. You'll notice total copper is actually 0.35, sulfide copper is 0.31. That's based on a limited model for the oxide cap. There is an oxidized cap on this deposit. So we have to get a better angle on this. And personally, I believe that the soluble copper in the system has been exaggerated in the current model. So with any luck, we might be able to get 0.33, 0.34 copper. You may think, well, geez, that's the second decimal place. Doesn't make a whole lot of difference, but it's actually potentially a 10% increase in grade, and over life of mine, that does have a significant impact on the NPV and IRR. And again, that's completely discounting minor silver, but potentially molybdenum credits. We don't have enough molybdenum assays in the database to really get a handle at this point on the potential for molybdenum credits, and the new info program should resolve that. Okay. So we expect to be able to introduce molybdenum as a credit into the model after we finish drilling. So again, it was a first pass. It was conservative. A lot of models right now would actually use a 0.12% cutoff. In North America, if we chose to go that route, we'd actually have 500 million tons at 0.285 sulfide. So it lowers the grade, but it adds, a couple hundred million pounds to the resource. But right now, our base case sits at about 3.1 billion pounds, or 1.4 million tons of copper metal, and we're satisfied. It's a good base case on which to go on. So that's basically the Copper Mountain expansion you can see here, and an expansion of the existing pit. And in the block model, this is a north-south section. Here you see the original pit, and in our 222 pit, because we've gone through many iterations in the last few months, it's sitting about 600 meters deeper than the old pit. So it's quite a substantial increase in size, but also in depth. But a nice thing here, you'll notice that the core of the system, centered on a porphyry plug, is actually the highest copper resource, but that's where you also get higher moly credits. So this system is classically zoned with a core of copper moly, and then going out into just copper towards the outside and lower grades. You'll see here there's some portions of the pit that are blank. That's because we have no data.
Okay.
And ditto for the north side. So again, the infill program is going to give us information we need there, but also more detailed information in the bottom of the pit here, where again, we're lacking data. So there was a lot of historical data in here. These holes that are in the air here obviously were drilled prior to extraction, but they still went into the model. And with any luck, we should be able to extend this higher grade zone, which is better than 0.5, right to the bottom of the pit. So that should have a decent impact on the overall resource.
So based on that there, Bob, so there is an opportunity then, because those blank zones are not actually barren, to lower the strip ratio as well.
Correct.
And as well with the high grade core being intact and right at the surface of what will be the new pit, then you'd be mining higher grade than in the resource to begin with, so you'd have a quicker payout of the mine.
Exactly. The nice when you start a bulk tonnage open pit operation, in an ideal world, you want your richest material to be up center in the deposit.
Yeah.
So that you can mine that first and pay off your capex as quickly as possible. It's not always the case. Sometimes you have to mine a lot of low grade before you get to the cherries. But in this case, we're going to be right into it. Bang. And
yeah, that's great. Oh, I believe you froze. Are you still with me, Bob? All right, we're recording again. The internet just dropped for a second. So,
okay. Yeah, so I just wanted to say, so because it's calcareous sequence, it actually neutralizes acidic fluid. So that affected the hydrothermal system. You don't have any sericitic rocks here. They're all potassic altered. So they are harder. And then in a normal porphyry system, you've got sericitized basalts, which makes it softer and easier to grind. In this case, it's all going to be relatively hard potassic altered material going into the mill. So we already know there's going to be a higher work index here, but that's going to be worked out eventually in the feasibility study. But on the plus side, there's absolutely no acid draining at Gaspe Copper. So from an environmental point of view, much easier to manage water effluents. If I take you to a slide, this is the current site.
Yeah,
it's been remediated. The pit is flooded, but there's also already water being captured out of the pit and going into the watershed in the Gaspe, and it's completely neutral. No acid draining at all. So in the longer term, in terms of remediation, managing water effluents or fluid effluents out of the system is going to be much easier. So back to the section, again, high grade copper moly core that's going to be better quantified with the additional drilling, and 30,000 meters should get us completely into the measured indicated, certainly for the copper, but also for the moly core here next, coming this fall, actually.
Yeah, because in the historical data, you know, when you get close to the intrusion there, the moly is almost 10 times what the homogeneous grade is. Like there was that section where it's 350 meters of 0.12 copper, 0.19 moly, and 1.14 grams per ton silver. So
Yeah,
you know that works out to over 1% copper equivalent.
copper equivalent. That's right.
Yeah, so I guess
That's right.
it'll be interesting to see if it makes sense economically to recover that, because you know moly's at what, $47,000 a ton. So,
Yeah,
you know,
exactly. And when you look at the table here, you know, at a 0.4 cutoff, this is where you see you got about 90 million tons running about 0.5.
mhm.
Well, this is it here. It's
Okay.
right.
Oh, great.
So it's not insignificant tonnage. And as I said, if we can scoop that out in the early days, and we should be able to,
Yeah.
then it's going to be a fast payback. And at least for the core zone, anticipate we should be able to recover both copper and moly for sure.
Yeah. Oh, good.
So in terms of the strategy here, so it's entirely based on making Copper Mountain work, the Copper Mountain Mount Copper expansion work.
Mhm.
Once you generate cash flow and you're paying off your mill and so on, this is the time where we're going to start looking at potentially going back underground in the original skarn zones, especially the C zone. They left a lot of pillars behind. There's probably 8 to 10 million tons of about 1.6 copper to be had.
Yeah.
In the remaining pillars. Let me show you a snapshot what these look like. In its day, this was one of the most spectacular underground operations in Quebec. The pillars were a good 30, 35 meters high.
Wow.
So it was a huge stepwise room and pillar operation, and very cavernous is the only way to describe it.
Mhm.
And yeah, it was a much higher grade. It's all stratiform skarn. So that's with paste backfill today, the possibility to go back in there and recover some of those. And there's some few small zones in the E zones of massive sulfide mantos running upwards 3-4% copper that could also be scavenged potentially from the E zone. But what's got me really interested in Porphyry Mountain, you can ignore these resources. They're from late 1990s. Noranda days, more drilling has been done. And at this point, I don't think we have really anything reliable coming out of the resource at Porphyry. But I published a table in the press release, just give a snapshot to shareholders of how exciting this could potentially be. Yeah. Yes, it's deep. The top is sitting about 1,100 meters, but this system is wide open in depth. And Xstrata drilled some holes into this in 2011. And they were never digitized or put into the database. But look at this hole, 943. It's 822 meters of over 1% copper equivalent.
Yeah, that's really exciting, because I actually pulled the old Xstrata report from December 2011, before they were bought out by Glencore.
Yeah.
And it says in there that in 2005, Stanley Clemmer, they put together a resource on Mount Porphyry, the ore body at 437 million tons at about 0.9% copper equivalent. And it also calls out in there, I'll post this for other people who want to take a look at it, under item 19, resource and mineral estimate. It says, it must be noted that the updated resource model for 2010 and 11 drilling program for Porphyry Mountain was not included in this report. So prior to this, those drill holes that you're showing on the screen right now, they basically had, you know, a little over 400 million tons at close to 1% copper. So you model this thing, and what it means. The implications of the deepest hole was the longest mineralized and the highest grade.
Yeah, exactly. So that was a bit of a stand-up discovery for Porphyry Mountain, because it had been discovered. Actually, it was discovered when Jeff and I were working at Gaspe Copper.
Yeah.
And interesting story there, because when we were working on the zonation model in Skarn, all of a sudden there was a one intersection from an old hole in the 70s. It was over 50 meters of 1%. It just didn't make any sense. It shouldn't have been there.
Right.
So I went back to the geologist, said, is this hole still around? Because the holes, the old drill holes were stockpiled all over the properties, just higgledy-piggledy. So I looked at the core inventory report, and they said, yeah, it's sitting under ball mill number 3. So I went to the mill, asked the superintendent when was next scheduled shutdown for ball mill 3. He says, well, you're in luck, it's tomorrow. So I said, fine. Went in there with 2 technicians, and lo and behold, there were piles of core boxes under the mill with about an inch of dust on them. Yanked them out, pulled out, found the intersection, and it was all classic porphyry style mineralization. This was deep. And I was, at the time, I thought, well, what the hell is that doing there? It wasn't at all skarn. It's just classic stock work. You could see the moly, you could see the copper. So I went back to Jeff Pierre Bernard and I said, guys, it looks to me like there's another porphyry system down here. It's deep, but I mean, this is completely out of whack. Because on surface, there's absolutely no evidence of mineralization at Porphyry Mountain. It's unaltered rock. It's baked, but it's unaltered, and no veins, nothing, and just a few porphyry cells. So we popped a hole at the time straight down the middle, 94, and this was a discovery hole, 592 meters of 0.71, and all hell broke loose. And the rest is history. Noranda put in about a dozen holes, and before this mine shut down 99, and then as you just pointed out, Xstrata popped a few more. So excuse me, it's very exciting. It's I think it's a deeper, richer system than Copper Mountain for sure. And now it's a question of size, because the only possibility here is, in fact, an underground bulk tonnage operation of some kind.
Right.
I think everyone has written off at this point natural block caving. The rock's not fractured enough. But we're certainly going to have to pop a few holes into that. I'm hoping to, drill some holes in Q3 this year after we're done with Copper Mountain, and just get a feeling for just how big and how deep the system goes. I have no qualms about drilling 2,500 meter holes here, especially with directional drilling, just to get a better handle of how big this thing could be.
Yeah, because you're looking at, I don't know, in my opinion, based on the historic, about 500 million tons as is, and with the converting the moly and doing a copper equivalent like that last hole, that's like 1.26, 1.28%.
Yeah, exactly. So we're going to wrap our brains around size, because for an underground bulk tonnage at depth, it will have to be big, right? You'd have to be mining 50, 100,000 tons a day. Big operation, and haul it back up.
You'll have the advantage though that if it like, because I was thinking as far as mine plan, you start with Copper Mountain, if you're doing 75,000 tons a day, that'll run for 18 years.
Yeah,
mill and everything be paid back, so your cost per ton moving underground to do a bulk tonnage,
exactly,
bulk underground is substantially lower. And then the size of this resource that we know of right now theoretically would produce for another 18 years. You're looking at between the two, 40-year
exactly.
It's
crazy. And that's a key point, because this mill is if it's designed to accommodate 70,000 tons a day, and it's paid off, well, then that opens the door to a potential underground bulk tonnage operation.
Yeah, and who knows
of the order of 50,000 tons a day.
Yeah. So that's part of the what I've been
communicating. That's part of the equation. And of course, for Noranda back then, that was out of the question. They required an entirely new mill that's twice as big.
Yeah, and also copper was like 60-70 cents a pound. So
it
exactly.
Doesn't make sense. And moly was nowhere near where it is as well.
Yeah.
So that's that's long-term upside. As you said, it could be a long-lived system, mining system as well. And the other thing I'd like to point out is the potential for oxidized stockpile. So again, in the non-43-101 reports published, my predecessors about 30 million tons here, 0.35. You can actually see it in the site photo, that rusty pile back here.
Mm-hmm.
So that's all the previous oxide strip from the cap here. You can still see, oxide cap sitting here and on Copper Mountain or Mount Copper. So we're going to be stripping more of that, increasing that stockpiles. And at some point, we're going to have to look at the possibility of a in situ heap leach operation for copper. It's never been done in Quebec, so permitting is not going to be easy. But it's certainly going to be worthwhile to take a crack at this, because that could add additional production, not of con, but copper anode through an SXCW circuit. So that's again another aspect of this project that could add a mine life down the road. But again, I emphasize the fact that the immediate challenge is to get this the Mount Copper open pit operation going, and then look at the other possibilities down the road. But I'm confident that it will work. We need $4 copper. I just can't see copper going down below $4 at this point in time. We're very bullish, and we know we're going to get this permitted. So this is all about location. There are a lot of great copper projects out there, including our neighbors to the south in the U.S. These projects have been bogged down in permitting now for the better part of a decade, and this is in Arizona. So it's becoming a huge issue internationally, getting a permit on your mining operation. And I have to say, Canada is still one of the best places in the world to get mine permits.
Yeah, I completely agree. And looking at the macro that's going on now, we're seeing copper prices above $4, and we have China shut down. We also have the dollar index at 15-year highs, and that has an inverse correlation to commodity prices, and that is going to reverse at some point in the near future.
Yeah,
so
exactly.
We're looking at probably $5, maybe even $6 copper in the next few years. It's very possible.
Well, obviously at $5 copper, this project knocks that out of the park, right? So, but
Yeah,
of course, part of the issue we have when we're doing economic studies, that the engineers force us to take the latest in inflation rates and real cost, and then they turn around and they try to tell you we have to model it at 380 copper. So it drives me crazy, actually.
Yeah, I
if
know.
you whack your project with actual inflation, give me a six-month VWAP on the copper price. Don't knock it down to these ridiculous levels.
Well, I did the math on just using the 0.31 copper. That gives you at $4 is in situ value about 27 and change per ton. And the cost that you've published as far as milling, processing, smelting, transportation, and G&A are $10 a ton, basically. So on a 75,000 ton a day mill, the cash flow after you pay your cost is 350 million a year US. So I think even using $4 copper, you're going to show a pretty phenomenal NPV once you do put the PEA on this at the end in Q4.
Yeah.
And also the thing is, people don't really understand, I think, your average investor, the thing about an NPV. After the 10th year, you essentially get no value in the NPV because it decreases. So something like this that could have potentially, between the two projects, a 40-year mine life, you may have an NPV that only says, 2 billion or something like that. But the actual cash flow through the life of the project is, 20 billion, something like that.
Well, that's the problem with discounted NPV models, right?
Yeah,
At 8% in the base metal space. Even to this day, it's 8% for base metals and 5% for gold.
Yeah.
God knows why, but we have to live with it. And that's the norm. After 10 years, your ore is not worth anything, which is complete nonsense. You end up with a big deposit with a 20-year mountain life. Your NPV doesn't drop. In fact, it improves with time because your CapEx has been paid off.
Yeah, exactly.
But right off the chute, you're stuck with only taking into account your first 10 years of production. That's why point we didn't bother beyond 10 years, because it has zero impact on NPV. And you could argue the same thing here. So I
Yeah.
always take NPV with a big grain of salt. What's more important, obviously, if you're going to consider a mine build, is the IRR.
Yeah.
That's far more important.
Yeah, definitely.
And we like to have at least 18-20% after tax. It's, in terms of giving a project a go ahead.
Right, right. Yeah, there's certainly a lot of possibilities here. And, current, what's the market cap today? It's like 120 million Canadian, I think. And that's where we've talked about this, and just, I think people can extrapolate that, okay, well, the in situ resource that is implied to be mineable is, about 14 million pounds, 14 billion pounds of copper equivalent. So, 50 billion in situ metal.
Yeah.
And that we haven't even talked about Pine Point, right?
Yeah, exactly.
Which is another massive project that has a lot of value, and
It does bring tremendous value, and obviously, I'm confident. Just to recap on the deal, we have till June 30th to get comfortable with the final elements of of our due diligence, and also finish negotiating the life of mine offtake agreement with Glencore. So we're making our way through that, but I fully expect that it will be a positive decision by the end of June, and then we have till the end of September to close it. So by this fall, I think the market will appreciate. We do intend on producing a PEA, and the market will appreciate the true value of this project in the copper space.
Yeah.
And so it all boils down to, well, what should you be trading at in terms of percentage of your total NPV on your projects? Well, and when you actually do a study of the various projects that are in development phase across 50, let's say, juniors in the listed on the TSX or the venture, there's actually no correlation between NPV and market cap. The values bounce around anywhere from 0.1 to 0.4 NPV. So that is tied in a lot to market sentiment respect to the commodity, for example.
Mm-hmm.
Like right now in the lithium space, the valuations are just insane, right?
Yeah.
And I can tell you just from marketing the last month, the market responds a lot better to copper than it does to zinc.
Yeah.
So I've got no regrets about bringing this project into the fold, but we do intend on carrying forward and developing both projects in parallel, because at the end of the day, I was mentioning IRR. I already know that the IRR at Point is going to be higher than Gaspe Copper.
Yeah.
With zinc, shallow open pit zinc operation of those grades, it's going to be very lucrative mine.
Yeah, and actually, hold on one second here.
Yeah.
Yeah, the internet's kind of sketchy today. It's dropped a few.
Yeah.
We're continuing with Bob Weers here now. We were just wrapping up a little conversation about how we're seeing the lithium market. And I wanted to segue into the other major asset that the company has, the Pine Point project, which, over 50 million tons of zinc plus lead. The old NPV on this was over 500 million. But you're issuing a new PEA,
Yep.
Which will include the definition drilling that you've brought more resources from an inferred to indicated. I believe, based on what I've read, it looks like some of that drilling, the grades were actually higher than in the old historic resource. And there's also the big thing is the hydrological study, where initially you had believed that it would be much more expensive dealing with water issues there, and it turns out it's going to be about 40-45% less of the capital required to deal with that. Is that correct?
Well, it's probably closer to 30. And
Okay.
that's the main thrust of this PEA is to obviously put more realistic numbers in terms of water management. That was our main purpose.
Mm-hmm.
It's just, I'm not going to hide the fact that concerns over water has been an overhanging issue on the Pine Point project since we acquired it.
Yeah.
In my mind, it's just never been justified. I mean, Cameco mined there for 25 years, and
Oh yeah.
they only had water issues in 2 pits. So at the end of the day, the bulk of this property, it's not a there is no water issue. So if there's any risk at all, it's at the west end of the property, where we do have high grade material in this zone here, underground prismatics that still need to be mined.
Mm-hmm.
But at this point, with the site-wide hydrogeological model, which actually I'll be able to press release on Monday.
Okay.
That's going to bring, I think, a lot of comfort to the fact that it's a cost item, but it's certainly not prohibitive at all.
Right.
And the PEA, I was hoping to have it out by mid-May. Now the guys are telling me end of May, beginning of June, so I'm pushing hard to get that out.
Okay.
It's going to be done at $1.30 zinc, which is more realistic. It's still relatively conservative.
Right.
But the PE's accepted $1.30 long-term zinc, and of course the numbers will speak for themselves. Unfortunately, the engineers are also, with respect to 2020 PEA on the CapEx, they're going to slap us with a 10% increase. They say that's the reality right now. Inflation in the mine space, or mine building space.
Right.
So don't expect the CapEx to drop. In fact, there'll be a slight increase, but the bulk of the impact of the reduced hydro or water management is more the OpEx and sustaining CapEx side. Because in the original CapEx, we only have $15 million for initial dewatering. That's not going to change a whole lot.
Mm-hmm.
But in terms of NPV and IRR, we'll see certainly net improvements. So beyond the 500 million NPV we had in the original PEA, with an IRR after tax close to 30. I mean, those are already excellent numbers. And
yeah.
And also, I will be publishing sensitivity tables with respect to zinc price. Right now, zinc has been peaking between 180 $2. I think it dropped a bit today, but still, I mean, at the $1.80 zinc, this project just knocks it out of the park. It's fantastic. So the market will be able to at least get a glimpse of sensitivity to zinc price.
Yeah, and again,
makes a huge difference.
That NPV is basically giving you no credit for mine life beyond
10 years.
10 years, right?
Yeah.
And I'm just seeing if I can find the PEA here. If I recall,
well, that's the problem with all discounted NPV and cash flow models, is that what you do 10 years down the road at 8% per year is irrelevant. It's a bit of a dumb way to look at things. Everybody wants mines with long lives, and then nobody wants to give you a value for any ore that you mine on year 12 or year 11. But that's just the reality of things. If you can't make it a get-go in the first 10 years, the argument is that you're never going to make it anyways. So in reality, there's not a whole lot of sense of doing a PEA. Keep in mind, PEA can only deal with inferred resources, or inferred or measured and indicated, but your feasibility can only use measured and indicated. So at the end of the day, there's not much point for your feasibility to do all that drilling to define the entire resource in the measured indicated category, because again, after 10 years, it's relatively worth it. So the most cost-effective method is to just drill off to measured and indicated your first 10 years of production, and leave the rest of it inferred. That's just the end of it.
Right.
And that's probably much what we're going to do. So, but we're going to launch the feasibility in the fall for Pine Point, and directly out of this updated PEA, which will be at this point closer to a pre-feas, if you ask me. So we have a solid resource. Just to correct you though, we will not update the resource at this point.
Okay.
It's going to be based on the original one,
okay.
But the market already knows that the resource obviously will be better, and we should be able to publish a resource update by the fall. And most of the increases and improvements have been done at the level of the tabular zones between the subvertical prismatics. But I'm quite anxious to finally drill our fat gravity anomaly this summer. We finally
Yeah.
cleared the road to do that. It's by far the strongest gravity anomaly on the entire property. We're only able to finally acquire it this year in terms of expanding our land package.
Mm-hmm.
And, we, in our original gravity surveys, some of the smaller relic prismatic zones, such as the W85, barely gave a response. But this one is just very high amplitude. So if that's not a prismatic deposit, I mean, I think I'm going to give up on geophysics completely. And
Yeah.
so it should be a prismatic, and it should be a big one. So I'm
Yeah.
very anxious to drill that this summer. It's going to another high grade zone of prismatic style mineralization running north of 25% lead zinc. Obviously, it's going to have a huge impact.
Oh, yeah.
Economics of this project.
Yeah, and prismatic zones, that's a lot of tonnage,
Yeah.
and high margin, and
High
yeah,
margin ore, and just ready to be plucked, right?
yeah.
And no, there are no historical drill holes by Cominco into this anomaly. For those who are wondering, obviously Cominco hadn't drilled every square hectare of this property, so there's still upside, and hopefully we'll finally prove it with a new discovery this year.
Yeah, I'm really looking forward to seeing that new PEA, because you get an after-tax IRR of, before it was around 30%, and it's going to increase. And in production, the prior CapEx around 500 million. That, going by the model that I looked at, the model that Haywood put out, you'd be kicking off, operational cash flow of over 400 million a year, and one of the top 10 largest zinc producers in the world, as far as
and hopefully we'll be able to do all that at $1.80 zinc.
Yeah, let alone $1.30.
Yeah,
right?
exactly.
You get to $1.80. That's and as far as one of the other attributes about this project in particular is, because it's a brownfield site, there's already infrastructure, power lines, right? You have roads,
exactly,
and access to rail and smelters and port for your concentrate. So
that's a big point. When I like to show this because it's a simple diagram that points to the fact that in North America right now, within the junior developer realm, the critical mass of, or regardless of grade, let's just say plus 5 billion pounds of lead zinc in the ground, infrastructure and quality of concentrate, with no penalties. Pine Point's the only project right now that fits the bill for those three criteria, but those are the most important three criteria when considering a base metal project, regardless of the specific commodity. You need infrastructure. You can't be trucking your concentrate over hundreds and hundreds of kilometers. It's not realistic. And today, with ESG and carbon footprint and so on, it's even worse to even consider such a scenario. So you need railhead, or you need deep water port, I would say, within 100 kilometers of your site.
Yeah,
which is too bad for exploration, because it boxes in the explorers now to relatively small surface area of our country in terms of where you would want to explore.
Right.
Obviously, if you find a monster world-class deposit, another Norilsk or another Red Dog, you don't have to worry so much about infrastructure. You'll just build it.
Right.
But without infrastructure, your hands, without a world-class deposit, your hands are tied. You gotta be far more realistic. But Pine Point's got all three, so it will be a mine. It's just absolutely no doubt about it.
Yeah. So what's the environment as far as financing? Because I've heard people say that it's a lot easier to get mine financing now, just because of the environment, where people are just looking, like private houses and investment funds.
No, it's mine financing. We spent all of COVID doing a couple of hundred Zooms across the entire planet. I actually like it because I save a fortune in travel costs and hotels. I really did.
Yeah.
but we did Singapore, Hong Kong, London, Zurich, uh, Houston, Washington, LA, you name it. It was great actually. But most of that was institutional. So private equity, you've got home offices, family offices, you've got sovereign funds, resource funds, generalist funds,
Mm.
the whole gamut. And the overwhelming message that we received is exactly that. Tons of money available for mine financing. It's quite astounding, actually,
Right.
and in the form of debt. And the big challenge now for developers is actually equity financing to get shovel ready, to get the feasibility done, to get permitting done. That is by far the biggest challenge for developers.
Right.
And again, permitting. Try to get a mine permit even in the States right now.
Oh,
Extremely,
yeah, it's
extremely
really tough.
difficult. Canada is still a paradise when it comes to permitting.
Yeah.
I wouldn't even consider trying to get a permit in continental Europe, for example. Forget it. So we've got a huge issue globally with permitting, and it's affecting even the greenest of metals. Look what happened to Rio Tinto with the Jadar project in Serbia.
Right.
They had all the permits in place. Some tennis player got pissed off. The government retracted all of the damn permits,
Yeah.
and now it's on standby again. And this is not for some ugly sulfide rich, nasty, polluting commodity. It's for lithium, for God's sakes.
Yeah.
So it's becoming insane globally how difficult it is to get permits. And that's for that reason that, frankly, it's certainly within the Osisko Metals, where we're only looking at Canadian assets. So a partnership with Glencore, I'm hoping is going to flourish, because Glencore does have a number of sleeping Canadian assets also
Right.
in their books. And if we could make Gaspe Copper a success, it's actually going to pave the way to more deals.
Yeah, yeah, and the thing is about these brownfield sites, it's not uncommon where these things get, with some exploration, become huge. Like one of your prior successes that went from a property that you acquired for
King
what?
and Lardic, yeah.
Yeah, was that 80,000, and then it was sold for 3 billion?
Yeah,
Yeah,
four actually, yeah.
yeah,
Yeah.
that's not a bad.
But that was a wild and crazy idea. As I tell my employees and partners, there's nothing wrong with going to a brownfield site, but you have to bring new ideas.
Yeah,
You can't just same old, same old. If you don't bring something new angles, either economically or processing or tech or
yeah,
geological, you're not going to get anywhere. So not all brownfield sites still have potential.
mm,
Some of them do, but it's just too deep, or too conditions have changed, too difficult, even from a social acceptability point of view.
mhm,
Like today, came Malartic today, get it passed by all the social criteria. It would be tough.
yeah,
Gaspe Copper, yeah, Murdochville is there. We're already getting support from the town council.
right,
But in my books, it's 500-600 meters away from the old mine site, and it wasn't that long that the old mine site shut down. So I don't anticipate any issues there in terms of social acceptance,
right.
and we'll keep monitoring that situation. But it's so far it's pretty good. So
Mm. So, when you do decide to, say you do decide to accept the option, from Glencore, you'll have to raise some money. That's no secret. But you have a core of institutions, I believe, that you can tap for that, right?
yeah, yeah,
So,
exactly. So
so and
Quebec Inc. has already indicated their interest in supporting this project.
yeah,
So what we need is the PEA though. So that's why
yeah,
we're on accelerated schedule here to finish the drilling and get the PEA out this year. So with the current resource right now, we're launching the PEA immediately to get it out by the fall.
yeah,
And that should pave the way for institutional financial support from Quebec Inc.
yeah,
We will be launching flow-through financing probably next week, simply to finance that 30,000 meters plus the summer fall program at Point. And the way we go after that, it's just going to be value creation on both fronts.
Yeah, and so as far as catalysts, so you have some drill results pending from Pine Point. You have the PEA from Pine Point sometime between now and mid-June, in the next 6 weeks or whatnot, 5 weeks. 30,000 meters of drilling at Copper Mountain.
Mount Copper, yep, exactly.
Yeah, right, and then initiating the PEA there. Q3, looking at putting some deep holes in Porphyry Mountain to define how big that thing is.
Or potentially, yep, exactly.
Yeah, potentially, yeah. So lots of stuff coming down the pipe.
Yeah, and we should be able to finish, if all goes well, we'll finish year end with our first PEA on Gaspe Copper.
Great.
So it's going to be, pretty busy year, very exciting. A lot of news flow, and again, we are all at our end very bullish on base metals for the long term, and now's the time to get involved in base metal development projects. Some people now call them energy transition metals. That's fine by me.
Yeah, that's great.
They're still base metals to me because we need them at the most basic level. Yeah. But yes, all this globalization, global initiatives for decarbonation and decarbonization of our economy and infrastructure spending is going to keep demand on both copper, lead, zinc very strong. Interesting note about, I like to point out about lead. A lot of people don't realize that with all this switch to EV market and vehicles, did you know that every electric vehicle still has a lead acid battery?
Yeah, you had mentioned that before.
Yeah, and people just don't know that. They think that, I've had lead is dead comments in marketing Point. It's not, lead is not dead at all. The whole point of electric vehicles is to have smaller vehicles, electrically powered, but in generally they're going to be smaller. So you're going to have more of them on the road. And that's fine. Well, perhaps not fine for traffic jams, but there's going to be a net increase in number of vehicles on the road, albeit with much lower or no emissions. But that just means that we need more zinc and we need more copper and we need more lead for those on the road. And until somebody comes up with a bright way of eliminating the startup sequence requiring a lot of amperage, even in electric vehicles, you still need those lead batteries.
Right. Yeah.
So, again, with just electrification of our transportation system, the demand for all base metals is still going to be very strong. Yeah, there's just no two ways about it.
Yeah, for sure. Yeah, it's an interesting opportunity. Obviously, that's why we've talked about the position that I've taken in the company when I just add it all up and 70 billion in metal across two projects at first blush appears to be economic. And a market cap of today 110 million Canadian.
No, I think we're poised to do well. Obviously, we've been range bound for some of the reasons I mentioned on Point over the last couple of years. That certainly doesn't help your market. You'll notice right now we're trading through quite a high volume in the last since March 28. I think we've traded 25 million shares. Yeah, but we're just cleaning up the market now on people that feel they've waited too long and run, and that's fine.
I noticed you've been doing that personally. You've been in the market buying consistently. With your now 37 plus million shares that you hold, most of which you bought on the open market, which is
and I'll keep doing it because I'm convinced these two projects are definitely going to be mine. Yeah. So, and again, with the relationship with Glencore now, financing the development of these is obviously going to be a lot easier.
Oh yeah, like having
can't ignore the fact that Glencore has done part of their strategies to get exposure to Point because again, it's an exceptionally clean concentrate.
Yeah.
And they do have to feed the Valleyfield smelter. So
Yeah,
It's a
you've got,
great move for them, and it's a great move for us.
yeah, you got Matagami and Kid Creek exhausting, and people don't realize. I think that Glencore is a commodity trader primarily, right? So
Yeah.
they need feed for their smelters, which is why they've agreed to take 100% of the offtake, the option for that out of Gaspe, and
Yeah.
also because people have asked why do you think Bob and his team had got this, and my reaction is, well, for one thing, Bob and Jeff worked this deposit, worked this mine when it was a mine, so they know it intimately. And another thing, there isn't a lot of teams out there that have the potential to bring an asset like this to production in the next few years. That's what Glencore would like.
Yes, exactly.
And they get 30,
Exactly.
they'll end up owning 30% of the company in the end, and have access to Pine Point at a time when the historic supplies of zinc in Canada, those two camps that I mentioned prior, are basically out of ore, and they've got this great asset, these smelters that need feed, and that's where that comes in. So I think it's a great strategy. I'm looking at this long term, over the next few years, how this could appreciate greatly. Well, just you trade it like, what is it? About 15% of your book value, and that book value only assigns about 30 million of value to Gaspe Copper.
Yeah, exactly.
So like, I don't know, 40
It
billion.
can only go up.
Yeah. And so there's a big disconnect of the net asset value being assigned for Gaspe, because there's no PEA on it now. But as soon as that happens, that's a major remodeling of value there,
Exactly.
to a peer average that they get about 28% of their book value. So
Yeah.
yeah.
And the nice thing about copper too is that we are already getting more institutional interest. The fact that now we have the copper project. Again, it's sad and illogical and irrational, but the lack of interest in the market for zinc is truly astounding. Zinc hit an all-time high, right, about 3 weeks ago. Did you see anything in the media, even in the resource media, about this milestone event in zinc space? Nothing. Nobody even blinked or looked at it. Like, who cares? Zinc is at $2. It's like, what? Come on. So zinc, I don't know why, but it's the zinc is really the poor man's metal. Even in the smelter space, you'll get right off the top 8% knocked off your spot price for the metal you sell to a smelter. Zinc is at 15.
Yeah.
Why? Why do you only get 85% of your spot on zinc to a smelter? It's that way across the board.
Yeah.
So it really is heavily biased against this metal, but that's also part of the reason why there's been no development in the zinc space. And now the chicken is coming home to roost with serious supply on the zinc side. And unless everybody is ready to start driving their rusty vehicles, electric or otherwise, the demand for zinc is going to remain robust.
Yeah, I completely agree. It's a good opportunity. I'm pretty agnostic to commodity. I just look for the best value that I can come across. And what I love about this is all the historical data that is somewhat obscure, and then if you didn't go digging for it, you wouldn't know it's there. And it'll come out eventually. You put out the PEA, you drill some holes at Porphyry Mountain, and then suddenly the market will go, what do you mean? You've got 500, 600, 700 million tons there. It's like, it's always been there. You just had to do the research.
You just had to drill it. Yeah.
Yeah.
Exactly. Great. And if I had to go out today anywhere outside BC to find a 3 billion pound copper resource, a new discovery that's not too far from infrastructure, I'd have to say I would have never been able to do it. It's just, I can't see where it could be out there. It's certainly not in Canada, outside BC. And even, even in BC, a lot of those copper resources are quite far away from infrastructure. So it's getting tough. It's going to get tougher and tougher to find base metal deposits that fit the bill on all three fronts here that I've got here on the screen. You need concentrate quality, you need infrastructure, and you need critical mass. Otherwise, it doesn't even justify the capex.
Oh, it looks like we're running out of time again, Bob.
Okay.
Yeah, this has been very informative. Thank you, and maybe
thank you, Jim.
Yeah, next time we speak, I'd like to also hear about your other company, the the new lithium company there.
Oh, yeah, the lithium grassroots, yeah, we're
Yeah,
launching
yeah,
that next week.
yeah.
Boots in the field,
Yeah,
start banging on rocks.
yeah. That sounds good. There's
Yeah,
all right. I'm going to press pause here, and then we can finish chatting. All right. Thank you, everyone, for tuning
all
in.
right, cheers.